Yeah, and I was going to say, like you, I've seen numerous cycles since 2000. How is your approach to investing in tech in early stage companies? You've seen the dot-com boom and bust, and you've seen the financial crisis. How has your approach to investing changed?
So in the late 90s, so I would say really between 98 and 2001 was the dot com gold rush. And at that time, I was an advisor to many dot coms plus venture capitalists. And what was frustrating to me, I came from a financial background and I couldn't figure out why value was being dictated based on anything other than ultimately the cash flow of a business. And it very much confused me. And there were these terms that value was based on eyeballs, impressions, all of these other things that I got to tell you, I was still relatively young and I was overwhelmed. And I would just say, man, why can't I like why am I having such difficulty understanding value until I understood it? That's when the implosion occurred. And it wasn't until the implosion that I finally realized, you know what? I get the hype cycles. I also get as an investor, and this took 20 years of evolutionary thinking on my part, was when you look at the investment cycle in the technology industry, you better understand the technology cycle first. And then there's a lag effect on the investment cycle, and you really are trying to correlate them. You don't want to be too late. And in many cases, you don't want to be too early. So there's this kind of Goldilocks of investing, which is extremely hard to do because you don't know exactly where you are in the cycle. However, there has been a pattern, whether it was the internet, whether it was mobility, whether it's was crypto, and now AI. It goes through a cycle, and it kind of goes through three layers. At least the technology cycle. There is an infrastructure layer first. And let's just use the internet as just the base analogy. The first cycle was you got to build the physical infrastructure. So in the mid to late 1990s, that was the pipes, fiber optics, et cetera. Who were the most valuable companies in the world at the time? It was the Nortels, the Alcatels, the Dow Cornings, et cetera. And the issue with the infrastructure layer is that you need to build the highways first. Once you build the highways, you got to build the tolls on the access points and how to get onto the highway and run your vehicle across. Call that the access layer or the middleware slash operating layer on top. And then the final layer is the application layer. So what are you going to do on this thing now that you're driving, on the road? What's interesting is when you go through those three phases, the infrastructure layer tends to commoditize and there tends to be dominated by a few very key players because it requires massive amounts of capital and people don't want to make 82 infrastructure decisions. And then it ends with the application layer. Now, here was the interesting thing, and I still believe in this as well. I was advising telcos very extensively in the late 1990s. And one of the concerns that I raised many, many times, and you could see it, is they ignored the application layer. So the telcos were really the middle. They provided the access, right? So there was a terminology called the internet service providers or ISPs. The telcos became the ISPs, and they made a ton of money through their subscribers. So all they were doing was giving the access. But I kept on saying, yeah, but access is going to get commoditized too. Where the extraction of the economics ultimately arises is at the application layer. So let's run this 20 years. Who makes all of the money on the internet? Is it Google, Apple, Microsoft? Uh, you know, go on, and they extracted it. And at the very bottom are the telcos, and below that was the Nortel. So where did Nortel go? Bankrupt. Where are the telcos? Struggling like crazy. And that application layer. So I think that's mirroring over and over and over again.